but he's on this toot about how he doesn't understand why everybody thinks things are bad. Everything is awesome. And I'm like, what are you talking about? He says, oh, look, stocks are back towards all-time highs. I'm like, what? Only because we're denominating in a currency that's getting devalued. I said, if you denominate the S&P in gold, it's dead flat. And I showed this chart yesterday. If you look at the last 20 years, okay, all of the increase in equities is the Fed balance sheet. 100% of it. 100% of it. And so when equities rolled over last year because they tried the QT thing, what did they do globally? Turned it back on. The QE is back on, and we are back to QE infinity. And because you have to, right? You can't have this entitlement program. And this is everywhere. This is Western Europe, Japan, US, all have the same problem. Aging population that's been promised all this stuff. You put their money into these passive 401ks, 403bs, and you cannot have a situation where the value goes down and they have to cover it. They don't have the money. There's no savings. Savings rate is plummeted. It's plumbing new all-time lows. And that mythic savings that, by handing out the money in the lockdowns, that wasn't savings. Counted as savings, but it wasn't savings.
I mean, it's almost like this MacGuffin or something like that. People debate, endlessly about what the Fed balance sheet really means. Ultimately, I have kind of a theory, like a left bell curve sort of theory about what this really is. But, I think the consistent thing about the Fed's balance sheet is that they haven't really been able to get it down, right? Various Fed chairs have pledged, said, hey, this is not going to be permanent when we do something like QE. And they always are, somewhat successful in, tapering and then actually, selling off some of the assets in the Fed's balance sheet. But then something happens, right? And at the end of 2018 or 2019, we got the pivot for the Powell pivot, which he's sort of famous for. And, similarly, people point to the BTFP and say, hey, well, that's not QE. And I agree, it's definitely not. It's a lifeline to the banks. But on the other hand, they couldn't get too far into selling assets off the Fed's balance sheet here. So, Mark, what do you kind of think when you see this chart?
QT, okay, fine. It's not, it's not QE. It's not quantitative easing, but it's a provision of capital to a system that doesn't balance. And it's at the end of the day what the Federal Reserve is, right? It's not a bank, okay? It's not federal. It doesn't have any reserves. There are no deposits, right? It's not any of the things that people think. It's not a bank. And what it is a private corporation that has a mission, essentially, to liquefy balance sheets of banks, right? That's its job. To be the lender of last resort and essentially create money out of thin air by lending money to these institutions. And then they can deposit it back with the Fed and earn interest, or they can buy government bonds. And, they can also buy equities, even though they're not supposed to. That happens. You look at the bank balance sheets; they actually have a whole bunch of equities, but they're not supposed to do that. But so it's Ponzi-nomics, Michael. It's literally Ponzi-nomics. It is what that chart that you just showed says to me is, and it's the same chart in the Bank of Japan, but worse on steroids, right? It's an even steeper slope, 60-degree line. Same at the ECB, same at the Bank of Japan. When you start down the road of a debt-fueled expansion, okay, where if I have $1 of equity and you have $1 of equity, and we combine those $2 and we start a business and we go out and we generate sales and we make mama dollar and papa dollar, make more dollars, okay, great. That's good. We worked hard, made some money.